I've raised over $150 million for real estate transactions for all different types of deals consistently, from single family to multifamily to self-storage to all the different strategies you can think of to deploy in different ways. We've raised capital for it, and I understand how to do the underwriting associated with these types of deals to make sure my investors are protected, which is the key to raising capital. Let's see, seller finance lending strategy. We do tons of these types of strategies consistently across the board to create really, really high yielding returns for ourselves and our investors. And we invest passively in a ton of different syndication investments consistently over and over and over again, where we're investing with other operators that are running those investments, that are managing the operations associated with those investments so that we don't have to. Because there's only so much you can do on the active side with fixing and flipping, buying and holding, lending capital, doing multifamily. Those are all active type investments. You have to focus on the passive also, so you can build that passive financial freedom for yourself. Obviously, managing those managers and doing your homework is very, very important on those types of deals. We also help investors with portfolio structuring and asset management services. We help investors on the tax mitigation side of things and creating that financial freedom strategy for themselves so that they can make money passively and create that financial freedom in their life and stop trading their time for their money over and over again working for a job. So this exact reason why I quit my CPA firm job to create that financial freedom, because I knew at that time that I cannot continue to trade my time for dollars and expect to be free over and over again. Yes, it takes a lot of work to build that passive cash flow stream, to build the assets to be able to do it, but I'm building cash flow streams that are going to make money for me, whether I'm working for it in the future or not. So I also help run a nonprofit organization called For Investors by Investors that we've been running since 2008 here in Southern California. And we've been just basically teaching financial education, real estate education over and over and over again, getting involved in front of and asking questions to very sophisticated operators that do different strategies across the board, from multifamily to retail to single family to lending to everything across the board. We've had speakers and operators that come in and teach, which has been a great knowledge base for me, learning from all these different great people. So let's get into it, okay? Enough fluff about me. Let's talk about how to market and find your deals, okay? So the first thing you need to understand is what do you need to know before you even start thinking about marketing, okay? We're going to go over that with you and some of the ground level infrastructure that you have to build in order to do this successfully, okay? Who are your sellers in the first place? Who are you targeting when you're going after sellers? And how can you help them? You cannot expect to get a deal, and you have no right to get that deal unless you find a way to help them solve their problems, get involved with them, help them every way you possibly can. Okay, who sees the problems and the problem properties, and how to market for those properties specifically. So you want to get in front of the people that are constantly seeing distressed properties, constantly seeing other people that have properties that want to potentially liquidate them, okay? And then how to actually market for those. There's a million strategies out there on the marketing to bring that lead flow in over and over and over again, okay? Then there's the tracking component. You have no business doing any marketing for any of this unless you are tracking exactly where all those leads come from, the costs involved, everything about your marketing campaign should be tracked in detail so that you can have the highest chance of success at doing this. Otherwise, you're just wasting money and wasting time not putting that proper tracking in place. And then understanding the systems and the automation that you can use when doing some of these different things to be able to keep that wheel turning over and over and over again, okay? So let's go over some of the main things that you need to know before you even start. You should not be even thinking about marketing and doing deals at all unless you have some of these things in place. So what is your target market, and have you done your homework? Do you know what market values in your target areas are? Do you know what market rents are in your target areas if you're looking for a buy and hold rental property? Understanding all of these facets, understanding Where's the hot area? Where are the dividing lines in your city that create one neighborhood being different from another neighborhood? Where are the crime areas? Where is the most distress occurring? What areas should you stay away from and actually invest in? What do the demographics look like? Where's the shift in the migration patterns coming from in these different markets? So understanding your markets as a whole, maybe picking a few of these markets, I think is key to focus on so that you can be have that right knowledge base to be able to get your feet on the ground in the market, knowing exactly what your target property is, okay, before you start. Do you have your team ready? Do you have your contractors? Do you have your property managers? Do you have your realtors in place? Do you have your inspectors in place? Do you have bird dogs and your team that's on the ground looking at deals for you in place? What are all your team members that need to be compiled in order to start this in the first place? Do you have your CPAs and attorneys, your title companies, your insurance agents? All of these things should be ready to go so that you can go and get that information and get this moved through the process. There's a complete process that goes through this from start to finish when you're buying a property that you need to make sure you have dialed in on point before you start marketing. Are you proficient at analyzing properties quickly? So if you don't know how to comp out a property extremely quickly, if you don't know how to understand your renovation numbers and things like that, which is actually my next point, is do you understand how to analyze a renovation? Can you walk through a property and know what a renovation is going to cost? Do you know what paint is going to cost in a property? Do you know what the roof is going to cost? The plumbing, the electrical, the HVAC system, the gutters, the trim work on the outside and landscaping. Do you have a general understanding in your market what those cost? Because the costs are totally different in a market like California than, for example, in Tennessee or the Midwest somewhere. So understanding what these costs are very, very key, and understanding how they work with regard to your property analysis is very key as well. Do you know all of your costs involved in that project? And we'll go over a quick example of what that looks like so that you understand what it takes to break down the numbers of an actual deal, okay? What are your exit strategies involved? Are you only fixing and flipping and selling on the MLS, which are subject to market volatility and changes in the market? Are you selling to investors? Are you holding the property long term? Are you trying to do seller financing to a homeowner and create a loan out of it, and then being able to go and collateralize that loan with a private investor or sell that loan off? There's a million ways to exit a property. Having multiple tools in your tool belt with regard to exiting these types of assets is super key to your own success, because one deal that you're going into thinking, hey, I'm just going to fix and flip this property, it will change overnight on you, where all of a sudden that is not the highest and best use of the property. It makes total sense to change your strategy, change your exit strategy involved there so that you can get the highest bang for your buck on this. And sometimes it just makes sense to hold them. I can tell you after flipping 1,000 houses that is my biggest mistake, is not holding more of these things and actually going through and selling them off for a profit that is, I'd say, inefficient for tax purposes, inefficient for building long-term wealth, versus just keeping the lights on as an income stream, which is very needed in some cases, but a lot of cases realize that if you don't need it, holding is always the better way to go if you are looking at long-term wealth building, where that asset will keep creating income over and over and over again for you long-term. And then, are your capital sources ready? Do you have a hard money lender lined up or a private investor lined up? Are you syndicating deals and need to have a complete pool of these different investors involved? So you need to be able to nurture those leads and make sure that they're consistently on board with you and understand what you're doing over and over again, so that way, when you're ready to pull a trigger on a deal, you can reach out to them and know that your funding is going to be there. Go get pre-qualified with your hard money lenders or your private money lenders or your traditional lenders if you're going that route and buying a property that way. All of those things should be done up front before you're even marketing to find the deals. This is the infrastructure. This is the base that you should be having before finding these deals. So, and here is the breakdown of the math that you should be understanding each time when you're doing a deal. So starting off with your market value minus your 6% commissions minus your closing costs comes to your gross proceeds. And then you have your purchase price, your renovation budget, which should always include a renovation buffer, especially with inflation the way it is right now. Making sure that you have proper inflation built into your renovation with that buffer is absolutely key. Your interest and points, your appraisal, your insurance, your closing costs, your title and loan fees involved, all of these things should be compiled. And one thing that's not included in this is your marketing costs. You should be including your cost per closed deal into your cost structure so that you know what your true profits are. If you're spending $10,000 on a deal or $5,000 on a deal to get a deal in the door via your marketing, then that's going to significantly change the profitability associated with that deal. And you need to make sure that that gets covered over and over again. Okay. So you're coming up with, in this example, $124,000 of costs, gross proceeds of 148. That's a 77.75% loan cost to the market value of that property, and about a $24,000 profit if you flipped it, which is about a 15% margin. That's normally what you're looking for. 15% in a potential volatile market is key to make sure that if there's a reduction in the market, if you're wrong on your comps, if you're wrong on your renovation budget, you have a little bit of buffer room to make sure you're making at least a 10% margin and not actually losing money or breaking even on a deal and doing all this work for nothing, because that happens a lot, by the way. So you have to make sure those numbers are solid. And so if you're going to get a loan from a private money lender or a hard money lender for $110,000 out of your $124,000 cost, that's about 68.75% loan to value, and about 14,392 down in this example as far as a down payment from your cost versus the loan amount. So these are the strategies. This is the breakdown that you do when you're actually breaking down the math on a flip project. Obviously, there's a different breakdown for a buy and hold project where you're looking at the vacancy factors, repairs factors, taxes, insurance, property management, CapEx, all of those things go into your cash flow analysis if you're focusing on that exit strategy. I typically go through and want to find this kind of a margin in even my hold assets so that I have some volatility buffers there if there's any changes in the market that occur. Okay, so understanding your base, understanding how to analyze a deal is absolutely key before you ever even get started spending any money on marketing. Okay, who are your sellers in the first place? Who's your target audience that you're going after to be able to find these deals? So first, you're looking for, obviously, distress, okay? You're looking for lists, which there are lists out there that you can buy this data or compile this data from multiple different sources. So death, divorce, and debt, obviously, the 3Ds. Financial instability, people that are lost their job or they're moving, or maybe they have major repairs on their property and they're having issues with it. Inherited properties, you're going to be looking for people on fixed income where the expenses are going through the roof and they need to reposition their financial situation and downsize, or being able to move so that they can actually afford the new monthly payment that is, maybe their old monthly payment is killing them at the moment because it's just too expensive. So changes in life situations or tax mitigation things. So these are all ways that people go through and are in distress. And so you want to find the lists so you can consistently reach out to these people over and over again. And there's strategies to implement to find all of these different sources of distress. So there's data out there all over the place for this stuff that you can go and pull, okay? Landlords, out-of-state landlords is key. That they might have repairs, they might have bad management, they might have low cash flow where they're not making a high enough return on investment. There might be some vandalism and theft that they dealt with, a tenant turnover, headaches that they just don't want to deal with managing managers, or, dealing with elderly that don't want to deal with property management anymore. So these are the things from a landlord perspective that causes distress. Trust me, there's been plenty of times I just want to sell assets because some random person ran into a house from a major street, or literally drove into a house. Like, this type of thing happens. It's amazing. Or a plumbing line to the street breaks right after you've just fully renovated the asset, or a contractor stole money from you and didn't do a good job on their deal. There's a million distress points from a landlord's perspective. You can go find these vacancies, go find the ones that are getting marketed for rent, and go look up who the owners are and market to them, consistently do mailers and reach out to them in different ways, and skip trace them to find their phone numbers and things like that to find these people. Also, you can buy lists again for this and do random general marketing. It's always better if you're finding the distress first versus going through and finding a list that maybe just equity investors or something, or equity and people that have equity in their homes, or homeowners that have equity in their homes, and doing a blanket mailer like that. You have a lot less percentage chance of getting a deal with a blanket mailer than you do necessarily when you're targeting distress in these ways. Okay, so lenders are people in default. Do they need capital? A lot of lenders out there, there's private lenders that need capital out there. So you can go and buy those deals if they're in default. There's a lot of lenders that are just liquidating deals because they take one over and they foreclosed on that property, and now they just want to liquidate it and get rid of it, because most lenders are not in the business of fixing and flipping these types of deals. So there's foreclosures, REOs, and there's private and bank foreclosures as well with regard to lenders. So there's a lot more private lenders than you could ever imagine, and they're very, very reachable. They all have deeds of trust for the most part on the properties. You can see if they're in default. If there was a notice of default, you always want to go after those private lenders as best you can. The banks are great, but they have their processes, they have their procedures. They're going to go out to a realtor across the board and do that type of stuff. So these are the things that you're focusing on with the lenders. Cities and governments. Okay, so there's property tax sales and IRS liens and condemned properties, and major construction violation properties, and totally blighted properties across the board that maybe have their grass 6 feet tall and are getting fined by the city over and over again. These are just signs of distress. Utility liens is another one. So going through and finding these distress points and consistently marketing, consistently pulling new lists. Everybody that's owned rental property understands you get those mailers that you're never intending on buying or selling a property, but you get the mailer anyways from someone that wants to buy the property, and you're not necessarily in distress, so that thing goes right into trash. If you're finding the distress in these ways and re-upping on your list and changing it consistently, taking the people off of your list that are no longer interested, and being able to adjust that list for new distress that comes out, and taking off the old distress ones that are no longer valid is key. So that data tracking and that re-upping on quality data is the key to finding this distress over and over and over again, to be able to market and find these deals. So focusing on these different key pain points strategically, maybe pick 5 of them, for example, and just start focusing on those 5. How do you find them? How do you find these deals? There's ListSource. There's tons of different places you can go out there and find data on these different things. There's government and local websites and postings that consistently occur with foreclosures. All of these are public knowledge, and it's out there. You can buy the data. It's available. Okay, how can you help them? You cannot actually go through and get these deals and expect to get a seller to sell you a property at a discount without providing some sort of value on the back end here. So you have to go through and provide value, and you have to know the ways that you can help them based on what distress they are in. So 1, you can come up with a cash closing, usually within a couple of weeks each time. So you want to have a quick closing as well. Normally, cash in hand is key. Plus, it keeps you with that deal because a lot of times having a quick closing stops some snake from coming in and taking it from you or something like that. Because in reality, yeah, you could sue the homeowner for a deal if they sell it from under you. But at the end of the day, it's really not worth the hassle from going and selling on one deal when you could be making money by finding another one. So having a quick closing is absolutely key for being able to get these deals under contract. Someone might be in distress right now where they're going to get foreclosed on next week, and you need to be closing in a week to save that person's deal, save that person's credit, and be able to stop them from going into foreclosure. Okay. Real estate team resources. Do you have the team around you? Does someone need a CPA to understand what the tax implications of a sale are going to be? Do you need the closing attorneys that are on deck waiting for you? Do you need your contractors to be able to do walkthroughs to assess renovation numbers on a project so that way you can inform the homeowner what those renovation costs are so that they can understand why you're offering a specific price. Okay. Discretion. A lot of times people are deathly afraid of their neighbors finding out that they are going into foreclosure or they're having some sort of issue there. So being able to be discreet, being able to go in and talk with those homeowners and say, we'll take this over for you. We'll even let you live in the property until you move. There's different things you can do to help these homeowners out, of course, across the board. Helping with credit repair. A lot of times they're in a bad situation. It's going to be really hard to get them into a new property, to get them into a new rental or something like that. So helping them get in the right position in the first place to be able to reposition their lives into a new scenario where you can get the property at the discount that you need to make sense. You're not getting that discount unless you provide values in other ways to these homeowners or investors that you're buying the properties from. Okay. Relocation costs and the backup. Do you know what those costs are for a moving company to be able to go through and someone to reset up the property in a new property in a new location? Do you have another location where they can move? Do you know property managers that are always looking to rent properties? Do you know other people that are selling properties that they might want to buy? Are there ways that you can help them position themselves to buy that new asset or get out of their current situation and out of the current house so that way you can take it over and renovate it and do what you do as a real estate investor? Okay. Sometimes in this market, being able to just put up repair money and partner with the homeowners can get you a far better return on investment for a lot less risk. A lot of these homeowners have current financing in place and they just are not getting the offers they want on their properties because maybe it needs renovation, or maybe they're thinking about selling but it needs $50,000 in renovation and they just don't have the money to put it up, so they're stuck. You can come in, if you understand this strategy, and put up the renovation money and set a price and say, I'm going to split profit with you above that number, or we're going to go through and improve your value of this property and we're going to get it to this price. And then we'll split that additional profit after I get paid back my renovation money, after you get paid back your set bottom line price that we put in place. So it's another way to squeeze money out of a deal where you don't have to put up the entire purchase price of that property either. You just have to put up the rehab costs. So very good strategy to utilize, especially in a hot market. Okay, listing properties. Have properties been on the market for a really long time where people can't get them sold, but you can for different ways, maybe selling to investors, maybe turning it into a rental and things like that as well. Do you have an agent on deck that if you can't get that deal, if you're just not going to get the margin, they're not going to give you that deal? Can you find a way to make money off of it in a different way? Are you a realtor or have a realtor on your team within your company where your realtor partner or yourself can list the property and make a commission off of it? Because that will definitely cut down your marketing costs. And you're looking at this consistently saying, how do I just keep generating income by every lead that comes in the door? I want to generate income. So being able to go through and list properties on the back end for them if you're not able to reach a deal on your pricing is key. Or being able to say, hey, this is my price, but I think we could list it for this, and then you'll net this amount. If you can't do that, I can pay cash for this, and I'll be closed in 2 weeks. Or we can list it on the market. It might take a month to get a buyer and another month to close that buyer afterwards with a refinance, but it might take 2 months to get that deal done. You'll net a little bit more, but your waiting time versus, hey, I got this cash offer closing in 2 weeks right here. Show them both options. Be transparent with what you're trying to do. Yes, you want that deal, but the transparency is what's going to get you that deal. That education of that buyer is what's going to get you that deal. Okay, market analysis, very, very key. You want to be able to understand what everything else is selling for in that market. You want to be able to share that information with the investor. Show them what fully renovated comps are going for. Then show them what unrenovated comps are going for in that area so that they can see those numbers as well and break down the math for them and say, look, I'm making a 15% margin on this for doing all this construction work across the board. And being able to share that information with them, share them the data, builds trust, shows them the value you're bringing to the table. Don't be afraid to be able to show them your numbers and break everything down, because there's major value in what you're doing by buying this property, renovating it. You got interest costs they're not thinking about. You got closing costs they're not thinking about. You got property taxes and insurance and everything else you can think of that goes into this as far as a cost. They're just saying purchase, rehab, sale, thinking that you're taking one over, getting one over on them. But in reality, you're not. You're breaking down the numbers for them, showing them, hey, this is what my profit is if I buy it via this strategy. And then if you want, we have these other strategies available as well. You can get subject to deals. You can do all different types of things to find ways of buying these assets. Okay, like I mentioned, education on the options, okay? Creative problem solving. Find out what their problem is, what their primary sticking point is, and find a way to accommodate, okay? Your job here is to solve problems. I mention all the time in my videos and when I'm talking to investors, real estate is all about solving problems. You want to go through and be a creative problem solver and solve their problems for them and understand what problems that exist, okay? Professionalism. Always very, very key to stay professional. Do what you say you're going to do. The moment you don't do what you say you're going to do, that deal is dead. It's gone. They're going to somebody else and they lost trust for you because you didn't do what you said you're going to do. Okay. No judgment. Everyone has financial distress. A lot of people are stuck because they feel like you're judging them. They feel like you think you're better than them. Everybody goes through financial problems, whether it's a medical issue, a financial issue. A lot of people just do not understand these things to be able to, fully get the get out of that judgment mentality where someone's judging them because they're in a bad financial spot. Okay. Saving their credit, very, very key. We talked about credit repair, but you can save their credit to stop it going from short sale, to stop it going from foreclosure in the first place, maybe catching them up on their previous payments and taking over the mortgage on a subject to deal. There's a million ways of doing that where they can continue to keep that credit good. And you can, in a subject to deal, you can even take it over. And one of the best strategies to do to convince them to do that is, hey, if I keep making that payment, great. I'm paying it down on your mortgage. You're building your credit over here. And on the other side, if I default, you get to take the property back. And I just paid down the mortgage for a long period of time. And now you're getting more equity in the property. So you can go liquidate it if you want to make a profit if I don't pay that mortgage. Okay. So moving time flexibility, if someone needs to stay in a property for a few months or they need to do some credit repair, turn them into a tenant afterwards. Make sure you sign that lease before closing so that you have a valid lease in place before closing. Never do that after the fact. Never just let a homeowner stay in that property. You have to have it in writing so that you are protected. But being able to give them flexibility, hey, go ahead and move in 3 months. I'll just rent it out from there. I'll reduce the rent from the price. You don't even have to pay rent for those 3 months. But starting month 4, if you're still there, you got to pay X amount in rent, or I need you to move out of the property. Financial distress, being able to understand how are they financially? Do you know how a personal budget works? and understand how to break that down so that you can share with a homeowner, hey, here's your personal budget. Here's what things you can do, what you need to be making every month to survive. Here's what your picture looks like over here once I pay off your credit card debt with this purchase of this property. Once I pay off your mortgage, get you from this position where you're financially stressed over to this position where you're financially secure. You have to be able to paint that picture for them. If you can't do that, then you will not get that deal in the first place, okay? And same thing, are they behind on their mortgage where you can catch them up? Do they need immediate cash? Do they need $5,000 to go put down as a security deposit and first month's rent on their next place? Can you get that for them so that way that's all taken care of and you're covered, okay? Let's see. Paying off that debt is also key. So who sees the properties? Okay, this is very, very key. This is part of your marketing strategy that doesn't cost you any money. Like I said, unless you get this down to a science where you know your exact process start to finish and you have your team members in place in every single part of that process to be super efficient, to phone call, analysis, on the ground, looking at the property, making an offer at the property to get it under contract, making sure that you have all your numbers from the renovation, all your documentation, you can get it closed in 2 weeks with your capital source. Unless you can do all those things, you have no business spending money on marketing, okay? Because you don't have enough, you're going to go through and waste a ton of money because you don't have the right infrastructure in place and understanding first. So you should really be focusing on those free methods to develop leads over and over again organically instead of paying for pay-by-click or direct mail marketing before you know your processes. Once you have your processes down, have at it with that type of marketing and being able to do that. I'm just trying to save you money because I spent a lot of money in the beginning losing money because I was doing things wrong with regard to my process. So the first people that see properties are lawyers and CPAs, okay? They see the distress. They see the negative cash flow coming. They have clients that have rentals. So being able to share with them your knowledge base across the board and what things you can bring to the table for their clients is very, very key, okay? Closing agents and lenders, another great source that are always seeing properties. So developing relationships with these key team members is absolutely key. And not just one, you need 5 or 10 in every category. So you can consistently reach out to them, consistently be going out and helping them every way you can. Remember, proper sales, you have no right to ask for the sale unless you provided enough value first beforehand to be able to allow them to, before you can get that sale actually occurring. So being able to add value to each one of these team members as you reach out to them is absolutely key to keeping you at the top of their mind when they have clients that they're looking at and like going, wow, this guy's tax return looks horrible because they have negative cash flow on 4 assets. Hey, I might have a resource. Someone might wants to buy those things. So absolutely key. Okay, appraisers and property management companies constantly seeing properties. You think appraisers don't see every time a property does not appraise out? You think property management companies don't see every single issue with properties? Being able to reach out to these companies consistently and tell them the resources that you have and can bring to the table are key, and turning them into affiliates, giving them incentive structures, either compensation based or via business in different ways is key. Neighbors, code enforcement, utility companies, all people that see properties. So you see a property with 6-foot grass, go ask a neighbor with nice grass what they think about that property and what issues they're having with it. Guaranteed they're going to tell you, I hate that person with 6-foot grass, or that's a vacant property. Go ahead and skip trace the owner and go find them to see if you can't get that deal under contract, or maybe they have the contact for the owner in the first place. So code enforcement, always seeing distressed issues all the time. Same thing with utility companies, being able to go and find out who's behind in utilities in different ways and finding those liens that are secured against properties from utility companies. Investors and wholesales, turn them into affiliates. We have tons of affiliates out there all over the place that are constantly bringing us deals over and over and over again. And I don't mind paying wholesalers or paying investors to find me the deals as long as my numbers work. Great. They got a deal at 50 cents on the dollar. Absolutely amazing. Give it to me and give me the numbers that I need, and I'll go through and take that deal down and do what I do with that deal. I don't worry about how much money they made on that deal. That's emotionally getting caught up, and you don't want to do that. Who cares? It's a grind to find these deals. Get those wholesalers paid for what they're doing. Inspectors and realtors, very, very key. Inspectors are always finding problems with properties. They might find mold where a deal falls out of contract for that. They might find other major issues with a property where a deal is going to fall out. Find out who those inspectors are. Realtors as well, very, very key. Try to get in backup position for any of those different people where you're sitting there and making offers for properties that are already under contract over and over again, and getting in those backup positions. For every realtor you meet, ask them what deals they have under contract, what deals they have coming up. Always finding new places to find deals. You want to have a ton of realtors and brokers at your whim to be able to provide you those deals as well. Churches, Section 8 housing. Churches find distressed people all the time. A distressed renter, a distressed homeowner. Sometimes they kick in money for people when they're going through financial hardship or medical issues and things like that. Very, very key. Section 8 Housing Authority is another place to get rentals and get properties across the board if you have good relationships with them. Contractors and project managers. Okay, these people are out in the field all day long finding deals, working on deals and in and out of neighborhoods. They're seeing these types of things. And if you give them incentive structures for performance and finding you those deals, they will bring them to your attention. If you say, hey, contractor, every house you bring up to me that has 6-foot high grass or looks like it's in disrepair, bring it to me. If I end up buying that deal, I'll give you $1,000 every time just for doing a drive-by of that deal. And I'll give you the construction work associated with it. Okay. Sales agents, insurance agents all see deal flow coming through the door. Okay. So eviction attorneys, turnkey companies, and online platforms are always great places to go and consistently find deals. And so the key with all of these different sources right here is, first, you are compiling all of the different people in each one of these categories and all the places you are going to consistently reach out to and consistently go to bring in deal flow over and over again. This is your warm market that you're constantly developing over a period of time. And then you are educating every single one of them about what you do, the types of deals you like to do, and the math, as well as how you can what things you can bring to the table to help them. And you're always going through and educating them, not just about what you do, but other things that can help them. If you see a tax law change that just came out, go shoot it to the CPA and say, hey, check this article out. It's a good one on this topic. Go send it out to all of your other, wholesalers and inspectors and realtors, just adding value over as much as you can. All you're looking to do is help these people so that they don't forget you. Okay. Then you're going to incentivize them in different ways. Now, lawyers and CPAs and different professionals aren't necessarily going to take a fee structure just for finding you deals like that or referring a client. Their benefit is you actually going through and helping their client, or saying, hey, guess what, CPA? I have a bunch of properties for any 1031 exchange client you have. Or, by the way, I can help with replacement property and finding those properties for your 1031 exchange clients. I can help you with tax mitigation strategies and things like that associated with cost segregation studies, because I have the team on the ground to get the data for them. There's a million ways of adding value and saying, this is how I can help your client in every way possible. If you have access to deals, you can find those ways of helping those clients in different ways. So you want to keep increasing your own education and financial education to be able to help every single one of these different team members involved. And then it's follow-up, and it's strategic follow-up and the systemization of that follow-up. So if you meet all these people, you write down 10 of every single category or 5 of every single category. Then you're going to come in and you're going to say, hey, what is my follow-up procedures for this? how am I going to track these people? I'm going to go put them into a database, into a tracking sheet. I don't care if it's Trello or, Asana or any of these other sites that you can have a good database. There's a lot of different ways of reaching out via email marketing as well. There's ways to be able to do this consistently and have a strategic follow-up system that's systematized, that where you can say, hey, every month I'm going to be hitting these people up, just adding value, or every 2 weeks I'm just adding value. And this is what I'm going to be coming up with, almost like a marketing plan for these specific strategic relationships that you're developing. Okay, great way to be able to increase your deal flow is developing these strategic relationships for free. Okay, marketing to your lead sources. You got the pay-by-click marketing and the direct mail marketing. Like I mentioned, you do not want to do these things unless you have your processes down pat. Now, there's pay-by-click marketing companies out there that will do all the marketing for you, give you your data and statistics. It's still your responsibility to track every single lead that comes in the door. How many phone calls are you getting? How many leads are you closing? How much did it cost you? All of those things are very, very key across the board. With the direct mail sources, you want to always be increasing and systematizing your leads and who you're mailing to in the first place, taking away the old ones, adding new ones, refreshing that list over and over again, and being consistent. That first mailer isn't going to do it for you. It's the 6th, the 12th mailer where they get your mailer every single month and going, why is this trash? Okay, fine. This guy emailed me 6 times already. Let me take a look at this, what this actually says. I'm tired of getting this postcard. So then that's what actually happens. And do things that are strategic. And we were taking Google images of their house and mailing it to them, had a much higher click-through rate on those things. Get dialed in on your postcards. And if you really, really want to get strategic, go do the birthday card thing. Whittle down your list to people that have 3 or 4 different distress points and only mail like the birthday card things with maybe a wax envelope or something like that to those high ticket leads, because changing the form of your marketing from a postcard to a birthday card gets a much higher open rate. There's also text marketing. There's all different types of things you can do. You can skip trace all these leads and find their phone numbers and their email addresses and call them as well. So if you have a property address with a homeowner's name on it, you can absolutely go do those skip tracing things and find them. It's a grind to find them, but you just keep calling, you keep going, and you keep pushing through these things. And it's always better to have someone else in place that's doing some of this grind for you that you're paying for, but that adds to your cost per closed deal. So you have to track that, okay? So the types of lists, the delinquency lists, equity lists, inheritance and probate lists, out-of-state owners lists, high equity lists, or people that have been in properties for 10 plus years, long-term residents or elderly. So you can strategically target each one of these different sources. Maybe it's a property tax list of the delinquencies on property taxes, or a eviction list at the courthouse steps where you're seeing which properties are on the docket that people are going through evictions on, where you're going to strategically target those homeowners. Tired of bad tenants, tired of property management that you can't control, tired of renovation costs because they just went through a rent ready when they have evictions, or there will be soon. Tired of the volatility with real estate, we'll buy your property in cash. Come talk to us. We'll give you a fair offer across the board for your asset. So those are the types of things that you're always looking for as far as these lists go, and you're mailing them out consistently or finding new ways of getting out to these people, either through skip tracing and things like that, or through direct mail or pay-by-click marketing, okay? And there's retargeting. Once they come in and click on one of your pay-by-click marketing ads, you can retarget them afterwards and follow them to their future websites and things like that as well, okay? So you can also enact SEO on your website, search engine optimization, where you can go through and strategically constantly post educational material and new content on your website so that you can drive traffic to your website. There's usually SEO specialists that do this for your website. You're going to be looking at those vacant properties. You're going to look at auction sites consistently. So that's just part of your sources. Yes, it's a little harder to find deals on auction sites because of the competition associated with it. However, you can find these diamonds sometimes that people aren't seeing. So you have to constantly be scouring these different auction sites, okay? Pending lists as well. Anything that's pending, go to every single realtor that has a pending listing and say, hey, can I be in a backup position on this offer for cash? A giant chunk of these things fall out of escrow. And if you're sitting there waiting after a homeowner just took a month and a half to try to sell their property and it falls out of escrow and you're sitting there waiting with a cash offer, it looks really strong at that point after they just got, put through the ringer by different, lenders and things like that, okay? MLS listings, make offers anyways. Even if you're not getting a lot of deals, make the offers. You meet a lot of realtors that way. And if you're making offers, you break down those offers to your realtors and say, here's my math with this. If I'm wrong, let me know. Or if the rehab is less than what I'm thinking, let me know. But this is why I came up with this offer, teaching those realtors every step of the way why you're making the offers on their MLS listings, keeping their contact information so you can reach out to them and also get on their pending lists. Okay. For sale by owner websites, great way for subject to deals. Usually people want to skip the realtor commissions in these sites, or they're asking a little too much for their property or something along those lines. So you can typically get a deal subject to the existing financing a lot easier via for sale by owner websites. Blogging and podcasting, it's just marketing to get the word out there of what you do, to build the trust, to be able to show homeowners, hey, this is what I do, these are the strategies I deploy, and this is what I'm trying to help people with so that they're aware. Car signs, bandit signs, we've got to be careful about the legality of the bandit signs in the different markets, but getting those signs out there, people call on them, it's just a percentage, even if it's 1% of the time that people see it or less, you're still getting calls from those different signs, okay? Meetup.com and networking events and flyers, okay? You can go to these networking events and find other investors that are buying, selling properties. You can go to Facebook groups and find deals consistently. You're going out there and you're consistently meeting investors that are seeing deal flow all the time. Very similar to that warm market list I mentioned to you. You're going to go out and meet new people all the time. When I first started networking, I was going to 4 to 5 networking events per week, every week for 2+ years to develop those types of relationships and got tons of deals. Even living here in Southern California, when I do not invest here, I invest in the Midwest for the most part and all different markets around the country. Those investors buy deals in different markets of the country, have distress in different ways, have problems they're trying to solve. So if I can bring my resources in and help them, I can make money off of those deals. So like I mentioned, social media and groups, you always want to be getting your word out there on those things. Craigslist and online advertising, consistently getting out there with general online and offline advertising as well. TV and press can be good. You want to really dial in your numbers, make sure your processes are amazing before you spend that kind of money, okay? And then emailing campaigns. Every single seller that you've ever bought a property from, or every single realtor, or every single team member you have, get them on your email list so that way they can see what you're doing. You're staying at the top and you're a resource for them anytime they do need it, okay? So tracking is everything, okay? Do not do any of the things that I just mentioned without tracking, okay? You have to know your cost per closed deal. If you don't know that number, you could be negative profitability across the board if you don't know what this is. And at the very beginning of your marketing career that you're doing here and the strategies to be able to get this going, you're going to have a much higher cost per closed deal until you refine it and get to the point where you know your numbers really, really well. You're quick, you're efficient, you're able to close these fast, and you're right on the money with all your numbers. So get that cost per closed deal. And very important also is your cost per lead. And you want to be able to do this on a per lead source basis, okay? Cost per closed deal and cost per lead from your mailers, from your pay-by-click marketing, from all your private relationships, from your Facebook posts and your groups, all of the different ways you're outlining these things. And you're saying, where did my leads actually come from? Even if they were dead leads, you want to know where those leads come from and then where the leads actually closed as well. So if you have a ton that is closing from pay-by-click, nothing that is closing from your direct mail, maybe focus a little bit more on pay-per-click marketing because it's working a little bit better, okay? And understanding what your profitability per deal is very, very important as well, okay? Number of deals analyzed versus closed deals. How many deals are coming in the door that you're analyzing? Is it one closed deal for every 100 you're analyzing? Is it 5? Is it 10? Is it a half a one for every 100 deals you're analyzing? Okay. Deal profitability after marketing costs, like I just mentioned, is very key. And then the deals closed and leads by market channel is very, very key as well, like I just mentioned. Follow-up procedures and tracking, okay? You have to automate this. So have someone in place on your team. If you don't have the time to consistently follow up with all of these leads, every lead that comes in the door, you're following up with them and following up with them. If they're not ready yet, okay, next week, okay, 2 weeks from now. Put a timer where you're like, okay, here's every lead that I have to follow up with today. Every day you're following up with leads, you're tagging them, you're leaving messages, you're trying to follow up with them to stay consistent. That can be a full-time job in itself, just tracking and following up with your lead flow, especially if you're getting a lot of marketing money out there, okay? Email drip campaigns. So if you're tired of manually following up, if someone's interested, send out educational material over and over again via email campaign so that you're adding value, and adding value to these different leads, okay? Push leads along a funnel so that they're pushing right through your system, right to be buyers of yours after you've built the most trust. All you're doing through the funnel is you're building trust and building trust and building trust, okay? And lead tracking and the marketing campaigns is very, very key. And answering the calls via the call system. So you want to be able to set up a system to where you have auto dialing happening, you have virtual assistants helping you, and they are trained correctly on the sales side. Your VAs are going to really cost you a lot of money if they are not trained correctly, or they can't sell correctly, or they can't communicate correctly and have the right lingo and be personable and all that kind of stuff, and also understand all the things where you can add value. If they don't understand those ways to add value, they are not going to close those deals. So really, you should be doing some of this in the beginning to refine your numbers, refine your processes, and training and training and training and spending a ton of time training the people that are going to be calling these people. There's actually outside companies out there that already have people trained that are bringing more and more people on. They could be good, they could be bad. It just depends on the person involved in that process, okay? We were using a lot of time CallRail and that kind of stuff to be able to track these, where they record the calls. I can go over those calls with my virtual assistants, with my other sales staff to help them become better at sales and saying, hey, you kind of weren't sure of yourself in this situation. You got to become a little bit more enthusiastic, a little bit more sure of yourself, and realize all you're doing is trying to help them. Okay. So that being said, here is your homework for success. You need to first pick your target market, understand all the data and the specifics of your target market. Okay. Then outline who is your team. Learn to analyze those properties really, really quickly so you can get in and out and get that process dialed in. Understand how to quickly estimate a renovation. So outline exterior, interior, and other major systems. Come up with general cost estimates based on square footage. Be able to do a walkthrough of these things, and through your walkthrough, come up with a general estimate of what your renovations costs are, and always put that buffer in place because you do have inflation that occurs right now in products and labor and everything else. So understanding your multiple exit strategies. Maybe something's not working because you're not getting your price, but you may not need your price if you can take over someone's mortgage and hold the property as a rental. You may not need to be able to get some of you may not need to be able to go through and sell these things on the open market and sell it on the MLS. You might just need to put up the renovation money for them and then do that. You may not need to take it down at all in the first place. So understanding all of your exit strategies is key. Get your capital sources ready so that you are ready to pull that trigger where those capital sources can close in a week to 2 weeks in cash and be done for you. So get ready for that. Outline the sellers you want to focus on. So take a note of maybe 5 of these to start and outline who they are and how you're targeting them and how you're going to market them based on the strategies I just outlined. Outline all the ways you can help those sellers, just like what I just went over in the class. and then create a list of contacts that see properties and systematically reach out to them, just like the CPAs and the attorneys. Maybe pick 5 to 10 of those to start and find 5 in every category that you can consistently reach out to, and set up that automated system and add more later as you go. Okay. Focus on 5 key markets on the strategies to implement to start, and that is key because you want to limit yourself just by one market unless you're just getting started. Maybe start with that one market, but I suggest going to multiple markets that you can choose from. You get multiple team members in every market, you have a much higher chance of getting deals closed with multiple systems set up in different markets around the country. And then set up your tracking. Track everything in detail and monitor those results. So this is your homework to get started. If you do these things to start, you will get deal flow in the door. Then it's a matter of analysis until you get the deals that you're looking for. Remember, you only need a few a year to replace your salary. So that's what you're looking for, okay? Now, we got a couple other webinars coming up. If you guys like this webinar, the first one coming up is how to properly analyze properties. And we start off with cost and profitability analysis, analyzing a property from start to finish, and understanding the total cost of that project. And then how to do your rental analysis and cash flow analysis, how to do your market value analysis and your appraisal analysis to make sure you're coming up with the right numbers on these deals, how to understand what your new property taxes are going to be and your insurance analysis associated with them. How do you do your due diligence and mitigate the risks on a deal? Understand what lending is available, understanding what a financeable and an unfinanceable property is, and understanding your different exit strategies. We'll go over the math on these things. I'll break everything down to you in detail. And the next webinar I have coming up is strategies to raise capital for real estate, which is very, very key. So you're going to go over the debt versus equity capital raise strategies. We're going to go over syndication investments and the documentation and proper operator due diligence and structures. So when you're trying to either raise capital yourself via a syndication, or you're raising capital as a general partner for another syndication, very, very key to understand these different concepts. Securities laws, absolutely key when raising capital. Investor protections. You can't raise capital without finding ways of protecting your investors. So that's one of the keys we're going over. Education is needed to raise that capital. You need to know how to protect them. Creative structuring and note strategies and things like that to add your tools to your tool belt for how to raise capital, either via note strategies or creative strategies involved. So these are the 2 webinars coming up for you guys. If you guys want to take those, feel free to take them. They're free. And then we also have a course coming up. If you like the actual content associated with this, we are doing a 6-month 25-week course on every aspect of real estate investing you can think of. So they come with live weekly Q&As with 25 full courses. We're going to give you all the tools you need and all the structures and strategies to give you a well-rounded real estate education. Literally a master's degree in real estate is what the education is encompassing. So we're having interviews with specialists. So CPAs, attorneys, financial planners, appraisers, contractors, all of them. We have actual interviews with them individually so that way you can understand from their perspective, not just mine, what knowledge they have to depart for you to be able to make you successful in their category, okay? We're going to give you all the analysis tools, the contracts, the checklists associated with this stuff so that you get started right. We have quick analysis tools where you can plug in 5 numbers and know if you have a deal right off the bat from a flip deal or a hold deal. And after you're done with the course, we will actually provide you with deals and provide you with financing for those deals. So we have deal flow, we have financing, we can help you get started with that actual deal flow as well. And we are not accepting everyone. You guys have a major time commitment with a 6-month course. If you don't have the time to do that, I don't want you in my course because I want you to be successful. I'm not going to waste my time teaching somebody that doesn't have the commitment to do this. Okay, this is a 6-month real estate course. This is no joke. A lot of workload involved. There's homework every week. There's live Q&As every week that you need to be a part of. There's actually action items that you have to be taking with every single course that comes out. My entire goal here is to create financial freedom in your life and get you going to be able to move you forward on these different strategies, okay? So included, here's the actual curriculum in the 6-month course, okay? We're going over your initial goal setting and how to run a business. Nobody teaches you how to run a business in a real estate course. These are the tools and the things you need to know about how to successfully put the right structures and infrastructure in place to run a business. We're going to go over multiple investment types: promissory notes, syndication investments, fixing and flipping, buying and holding, multifamily, all of the above. We're going over the strategies that I implement and the detail about those strategies, okay? Financial education, personal and business. If you don't have a personal budget together, if you don't have your right LLCs and structures in place and understand how to run a business for successfully, you're dead in the water before you start. A lot of real estate investors get started. They might find one deal here, one deal there. They're not really running a business. If you want to scale, if you want financial freedom, you need to be able to learn how to run a business. Most businesses fail because of this part right here. Okay, building your team, also very key to your success. We're going over every single team member that is associated with real estate with live interviews. What makes a good team member? What makes a bad team member involved in every single one of these? Market analysis, we're going over in detail. We're going over how to market and find your deals in much more detail than I went over today. The property acquisition process from start to finish, from the purchase and the initial analysis and the lead flow, all the way through closing the property, all the way through renovating, all the way through sale or hand off to property management. Every aspect that you need to go, along with the contracts and the analysis tools with it. Sales training on how to talk to prospects. Property management. What makes a good property manager? How do you manage the managers correctly? Insurance planning and what makes a good insurance policy, the tax and legal structures associated with this, what entities should you be creating or not creating in different ways to protect yourself, self-directed IRAs and 401ks. I have bought and sold properties inside my own 401k plan, inside my health savings account, inside my IRA. There's tons of ways to be able to invest in real estate or businesses or other outside investments right inside your IRA or 401k. Multifamily analysis. I'll be breaking down all the detail on how to analyze multifamilies and take those deals down. Understanding all of your different exit strategies, lending money and raising capital. The lifeblood of real estate deals is raising that capital and finding that capital so that you can take your deals down. Managing your investments, case studies, and actually making offers. I'm going through and helping you make these offers, get them done. So if you guys are interested in working with us, you guys found this course to be valuable in different ways for the how to find deals in this market and find deals in this market, let me know. You guys can reach out at info@becomearealestatemaster.com, or you can go to becomearealestatemaster.com. Thanks so much, guys. I appreciate it. I hope you guys enjoyed and got some value out of this, and I will see you later on. Feel free to reach out and look forward to hearing from you. Talk to you soon.